everyone, I hope you are doing well. In this presentation, we are going to discuss ISA 560 sequent event. The standard deal with the auditor responsibility for events that occur after the financial statement date and how these events may impact the audit opinion. By the end of the session, you should be comfortable identifying the sequence event and understanding how the auditor responds to them. Let's move forward to our agenda of the video. The main agenda of my video is we are going to discuss importance, objectives, scopes. We will discuss key definitions, key requirement, practical example, and see commonly mistakes that usually made, exam focus point of view, and summary. Let's move forward to overview of ISA 560. ISA 560, what is the main focus of ISA 560? ISA 560 focus on events that occur after the financial statement date but before the auditor report is issued, as well as a certain fact discovered after the audit report date. The key process of the standard is to ensure that all the material events that could influence the user decision are either addressed or disclosed appropriately in the financial statement. Let's move forward and see the objectives of ISA 560. The main objective of ISA 560 is to ensure that the sequent event requiring adjustment or disclosure and properly affect in financial statement. It is also required the auditor to respond appropriately to the fact discovered after the audit report date. Specifically, if those facts would have affected the audit opinion and had been known earlier. Let's move forward to the scope of ISA 560. ISA 560 apply to two basically main things. Event occurring between the financial statement date and the audit report date, and the fact discovered after the auditor report but before the financial statement are issued. However, we can say that ISA 560 does not apply to other information including with financial statement which is covered under ISA 720. Forward and discuss what are the key definitions of ISA 560. Now I'm going to divide the definition in two main zones. First, I'm going to explain the main words that commonly used in the standard. Financial statement date. What is this? The end of the reporting period. The date which is at the end of reporting period. Financial statement approval date. When the management approves the statement. Audit report date. When the auditor signed the report. And last, financial statement issues date. When they are made available to the third party. Now let's conclude the definition. We can say that subsequent events are events occurring between the financial statement date and audit report date, as well as certain facts discovered afterward. Now I hope that you will able to understand definition very clearly. Let's move forward to key requirement of this standard. What are the responsibilities and key requirement of this standard? The auditor must plan and perform audit procedure up to the date of the audit report, and to identify the sequent event they may require adjustment or closure that include understanding the management procedures for identifying the sequent event, inquiring whether the management is aware of any sequent event or any significant event, reviewing the minute of meeting, reviewing the reviewing the internal financial statement. These procedures help ensure that no material subsequent event are missed. Now let's move forward and discuss the common mistake that usually we make. Commonly risk in relationship to ISA 560 includes failing to perform a procedure right up to the audit report date, incorrect and classify adjustment versus not adjusting event, ignoring event and discover later, issuing an inappropriate audit opinion. These are areas exam and regulator focus on. For exam, you should clearly understand the difference between adjusting and non-adjusting events, the auditor responsibility after the reporting date, what happened when the management refused the amendment, the financial statement, the impact of the impact of audit report, and now I hope you will understand what the mistakes and exam focus point of view. Now let's move forward and conclude our lecture. To summarize, the auditor generally has no ongoing obligations after the audit report is issued. However, its effect comes to light that would have affect the audit opinions. The auditor must discuss the matter with management, determine whether the financial statement need amendment, perform audit procedure on the amendment statement, issue a new audit report if required. If management reissue to act appropriately, the auditor must take a step to prevent reliance on the original audit report. That's all for ISA 560. I hope you understand that.